My name is Lou from Vancouver Wealth Management. You are watching Taking Stock.
Counting down to the close. Today is Tuesday, September 16th, and this is Taking Stock. I'm Ashley Mastronardi. We're going to have so much fun for the next half hour. Lots of news moving the markets today. Stocks are fractionally lower as we approach the end of trading, and that's after the S&P 500 closed above 6,600 yesterday for the first time ever. The major averages received a boost after President Trump spoke favorably about the U.S.'s trade talks with China in Madrid. Meanwhile, the two-day FOMC meeting kicked off today, with the Fed likely to cut interest rates for the first time this year on Wednesday. According to the latest data, over 96% of traders anticipate a 25 basis point cut. And we'll listen to Fed Chair Jerome Powell's comments shortly after the decision for further guidance on rate cuts. Today on Taking Stock, we're going to hear from Phil Rosen of Opening Bell Daily, Will Beeson of Universe Labs, and Rawan Bador of Zest Equity. Plus, FinTech TV's Patricia Wu is going to sit down with Adel Harabi and Lou Zhou from Money 2020, Middle East and Riyadh. Now it is time for the bell. Western Alliance Bank is going to be doing the honors. They're here to celebrate the 20th anniversary of their listing on the New York Stock Exchange. As the markets close, let's take a look at where they close. The S&P 500 is down 0.13%. The Dow is also down fractionally, as well as the Russell 2000 and the New York Stock Exchange Composite. Joining us now is Phil Rosen. He's the editor-in-chief of Opening Bell Daily. Phil, welcome to the show.
Thank you for having me.
So all eyes are on the Fed. Big meeting tomorrow, 2 p.m. What do you think is going to happen?
So we're going to be looking at a 25 basis point cut most likely. That's what markets are expecting. But the thing that I will be watching is we might get our first three-way descent in 40 years. You're going to have people voting for 50 basis point cut, 25 basis point cut, and no cut. So all of that together, we haven't seen this sort of three-way disagreement in decades, and that is going to be something to watch.
All right, and I know some people, including yourself, are in the camp that there should be a 50 basis point cut. What is your argument for that?
So this year, I think AI has proven more deflationary than anyone expected, right? Companies are more productive, individuals are more productive than anyone anticipated, and tariffs have been less inflationary than expected. So together, those two things, I think, give the Fed plenty of room to do 50 basis points rather than the typical 25 basis points.
But realistically, what do you think is going to happen?
We are probably not going to get the jumbo cut. That's, I would say, a minority right now. Fewer people think that the 50 basis point cut is warranted. Some people are still afraid of tariff inflation. Some people say that the labor market isn't so deteriorated that we need 50 basis points. I do think that jobs don't look that great, and I think that we have the room to cut more than we typically do.
All right, and I'm also hearing rumblings of further rate cuts as we move throughout the year. What do you see the Fed doing before the end of the year?
Yeah, we'll probably get between 2 and 3 rate cuts. I'm, of course, in the 3 rate cut camp if we go 25 basis points each time. And again, you have these two forces, AI being disinflationary and tariffs being not as inflationary as expected, at least so far. So together, I think that really does give policymakers plenty of room to be easier on policy.
And I know you mentioned AI. Do you think that we're risking oversaturation right now? Where do you think we're going with that?
So you could definitely make the case that the market is top heavy and all these massive tech companies that are spending billions and billions on AI, that might come to an end at some point, but at this point, the balance sheets are too big, the margins are too big, these companies have never been so profitable. So for now, I'm not too concerned about fears of a bubble, let's say.
All right, and I know you have your own show, Opening Bell Daily. What else are you following that you think might become bigger, maybe something under the radar right now?
So I think the AI theme in investing, that is the biggest story of the year, right? I think fading that theme as out of fear that there's too much risk involved or that it's a bubble, I don't think that's going to be something that history will look kindly on for investors, right? I think the investors that continue to bet on AI will do very well in this market.
All right, anything else you want to add and leave us with on taking stock today?
Nothing comes to mind. I'll be watching closely the Fed meeting tomorrow.
All right. Thank you so much, Bill Rosen, Editor-in-Chief of Opening Bell Daily. Thank you for joining us. Okay, we are going to take a walk. We're going to go to, hello, Pete Tuckman. He was on the show yesterday. Okay, excuse me. Hi, Dean. We are walking to the NYSE Notables. This is my second time hosting the show, and this walk is my favorite part. And it's because we're breaking the fourth wall. We're showing you what is going on the floor of the New York Stock Exchange. And we have two of our gorgeous, fabulous stocks. We have Eli Lilly. They are up 2.21% right now. Shares soared today after the drug maker announced a $5 billion investment in a new Virginia manufacturing facility. The plant will boost production of targeted cancer drugs and other advanced treatments. It's part of a broader push to build 4 new U.S. sites. Then we also have Novo Nordisk. Shares rose after the drug maker reported positive late-stage results for an experimental weekly weight loss injection. The company says it will advance the medicine into a dedicated phase 3-year program later this year. So now we are going to flip to a package. FinTech TV's Patricia Wu caught up with Adel Al-Arbi. He is the Saudi advisor on sovereignty, technology, and data in Riyadh. Let's take a listen.
Welcome. We're here at Money 2020 Middle East. We are at the Riyadh Exhibition and Convention Center, and we're delighted to have Mr. Adel Al-Arbi here with us. And you are an advisor on sovereignty, technology, and data. Tell us a little bit about that.
Well, first of all, thank you for having me. Sovereignty is a new subject of interest within the technology world. And it's fairly simple to understand what it represents. It's where does the country's control starts and where it stops within technology. Because just like any other trade or business, countries trade, there's international trade happening, and there's always a need to solve disputes on what happens in there. So whenever an international company like a hyperscaler like AWS or Microsoft Azure, they come into the country, they establish talks. Those talks touch on many subjects. One of them is sovereignty. One of them is the incentives they would get for coming in here and what they bring with them to the country.
Well, speaking of big international companies, we've got a lot of them here with over 45,000 people expected at this inaugural Money 2020 Middle East. And I was thinking, this is such a great example of Saudi Arabia's Vision 2030. Like, tell us about how something this big and ambitious, encompasses the core goals of that blueprint for the future.
Well, the vision comes with a plan, and it's a very strategic approach that was started over 10 years ago. And alhamdulillah, so far we've been reaping the benefits of that. The financial sector, especially the fintech, are set to gain the most in the coming couple of years due to everything else that is moving. The presence of all the global hyperscalers within the country, the incentives for them to join the economy, what they promise to offer in terms of it being one of the competing cloud regions all over the globe, means that the computational costs for fintech are going to be the most affordable within Saudi. So that is a big push for the fintech ventures within the country at Twin GCC.
Right. And speaking of fintech, we have to talk about blockchain. Tell us a little bit about the kingdom's stance on the technology.
So Saudi Arabia is right now is a digital first economy. That's the move. That's the plan, and we're diversifying from an oil-based economy to a bigger economy. The blockchain is a very promising technology, and the public sector has been supportive of it, and it's present, especially at one of our biggest events in technology, Leap. One of the accompanying events is specifically for blockchain, where a lot of the big names on the globe have been present, and they've signed deals and contracts in there.
Time now for a few fintech, crypto, and AI headlines. First, Bitcoin is up 1% on the day, trading above $116,500, while ETH is down about 1%, hovering around $4,480 as traders await Wednesday's crucial Fed decision. Up next, Google is rolling out a new open source standard that lets AI agents send and receive payments, including US dollar pegged stablecoins. Finally, Workday announced a deal to buy AI firm Sana for $1.1 billion, aiming to boost its HR software with new AI capabilities. Joining us now is Will Beeson, thanks Josh, founder and CEO of Uniform Labs. It's a firm that's building the liquidity layer for on-chain finance. Welcome to the show, and can you tell us what that means? What is for somebody who's new to crypto, to stablecoin, what is your firm doing?
Sure. So we are operating at the intersection of blockchain infrastructure and traditional finance. We're at a unique point in the development of the industry where we think for the first time we can really upgrade the back-end infrastructure of financial markets. So that means everything from stable coins, which is tokenizing dollars and putting them on chain, to tokenizing financial assets and putting them on chain as well. And once we do this, we create 24/7 instant liquidity, instant settlement across cash and assets in a wide range of markets all throughout the world.
When you say tokenizing assets, can you break that down for us?
Sure. So if you think about the history of securities, I mean, generations ago we had bearer instruments, paper, stock certificates. Eventually we got to a point where those paper stock certificates and bonds were dematerialized and held at central depositories. Now we're effectively changing the technical implementation. We live in an internet age, we live in a digital age, and there are technical ways where we can implement securities in more functional forms. Simply it's that. What that means is using cryptography and technology developed around blockchain to be able to create unique representations of stocks, of bonds, of dollars in ways that can't be replicated, can't be double spent, can't be copied and pasted, but can nonetheless transact in fully digital internet speed ways.
And these are considered real world assets, right? Can you break that down a little bit more?
Yeah, great question. So crypto, starting with Bitcoin and then other crypto assets for 10 plus years at this point, have really focused on creating tokens that are linked to maybe new types of projects, new types of innovations which existed only on blockchain. Here, what tokenization allows us to do is basically connect existing real-world assets, hence the name, whether it's a stock that exists on the New York Stock Exchange trading floor, whether it's a bond, whether it's gold, whether it's mineral rights or a deed on a house, and represent those in non-replicable technical form via tokens, effectively bridging traditional real-world value onto these upgraded settlement rails.
All right, and where, regarding stablecoin, where are you seeing the biggest growth right now?
So I think the biggest growth is coming from two places. The first is emerging market adoption of US dollar denominated spending and savings. Individuals who maybe traditionally would have sought physical US dollars to hedge against inflation or political or financial stability in their local countries are using stablecoins, dollar denominated fully reserved, fully collateralized, and therefore very safe, they're using that to hedge against inflation and increasingly to transact in some places. And the other place is in payments. So the ability, per what I was saying before, these 24/7 instant settlement rails, to send a payment instantly, anytime, anywhere in the world, without relying on traditional, relatively brittle payment systems.
All right, and can you explain the importance of market infrastructure to deliver liquidity in these assets?
100%. So this is really the key unlock, what has been to date the missing piece. So if we think about the things I've talked about, stable coins on one side, effectively dollars that can move at the speed of the internet, and tokenized financial assets on the other side. Now, for the first time, with the right infrastructure, we can connect these two pools of value. We can make it so that holders of assets can swap them, can exchange them against cash or other assets 24/7 instantly, eliminate counterparty risk, eliminate settlement risk, and generally bring more efficiency to the financial system. But it's this infrastructure that connects assets and stablecoins which makes this possible. And that's what we're building at Uniform Labs.
All right, and I know there's been a lot of movement in the regulatory environment around crypto. Can you talk a little bit about that?
Yeah, so it's been probably the theme for the whole sector over the past 6 to 9 months at this point. There was a very important bill which passed this summer called the Genius Act, which effectively offered a legal framework for payment stablecoins. A lot of innovation in blockchain and crypto had happened outside of existing regulatory frameworks simply because it was new and existing laws didn't yet know how to deal with it. Finally, we're seeing real, clear guidance in terms of what laws say, what legislation says, and ultimately what regulators say about how traditional assets can exist in tokenized form, about how traditional cash can exist in tokenized form. And that clarity is allowing builders like us to move faster, and it's also allowing huge institutions like BlackRock and Fidelity and State Street to increasingly get involved in this space.
And in the last 30 seconds, what is next for Uniform Labs?
So our first product offering is a protocol, liquidity protocol called Multi-Liquid. It works with some of the largest issuers of these tokenized assets, specifically tokenized treasury assets, money market funds, and it works with stablecoin issuers. And it provides a venue for all market participants to be able to swap in real time between cash in the form of stablecoins and risk-free yield in the form of tokenized treasuries. That's what we're focused on right now.
All right, well, thank you to Will Beeson, founder and CEO of Uniform Labs. Thank you so much for joining us here.
Thank you, Ashley.
On
Thank
Taking
you.
Stock.
Thank you. Thank you.
Coming up, we're gonna have the latest on startups, raises, and rounds, plus an interview with Rowan Bidor of Zest Equity.
Money 2020 Middle East from Riyadh is brought to you by GFT, Ethos DeFi, and Avrio.
Today in startups raises and rounds, first humanoid robotic startup Figure has been valued at $39 billion after raising more than $1 billion in new funding. That's backed by heavyweights like NVIDIA, Intel, and Qualcomm. Next, Psi Quantum has raised $1 billion at a $7 billion valuation, promising a quantum computer within 2 years. The company is partnering with NVIDIA to link quantum hardware and AI chips. Finally, StubHub is set to make its Wall Street debut this week, with shares expected to start trading Wednesday under the ticker STUB. Money 2020 Middle East is underway in Riyadh, and Chief Strategy Officer Scarlett Sieber sat down with Zest Equity's Rowan Bedour. Take a listen.
Welcome back. I am Scarlett Sieber. Hello, Taking Stock family. We are here live at Money 2020 Middle East, and we have another great guest for you today. We've got Rowan Bedour, who is co-founder of Zest Equity. Rowan, thank you so much for being here.
Thank you for having me, Scarlett.
Absolutely. So I'm a big fan of Zest. I wanted to speak to you on the show, and let's just dive right into it. You've described private market transactions in emerging markets as fragmented. We've heard about that a lot at the show here so far, often run through emails and spreadsheets. How is Zest Equity's end-to-end digital infrastructure changing that dynamic, and what are you looking forward to?
Awesome. Great question. So let's start here. From our perspective, friction is embedded in a transaction process. And friction causes a lot of errors, wastes time, wastes money. And what we're trying to build at Zest is an infrastructure layer that streamlines the whole communication process, the governance, and the workflow of transaction execution, with the goal being to embed best practices, to embed that streamlined workflow, which will allow for scalable growth in private markets. So our clients basically would step into our ecosystem, pick the tools that they need to use to execute their deal in a streamlined manner, and just press play. So the idea is you have a modular, very flexible infrastructure layer, but that still is extremely automated and based on best practices.
It's a nice combination. So one of the things that I love to talk about, you have digitized over 175 million people, 175 million across more than 150 transactions. I like to talk tech. This is a tech show, right? What innovations in your platform, compliance automation, funding flows, or investor onboarding, what has been the most critical to your scale?
So I think most critically, it's the back-end automation. We are very AI native, and usually the magic happens where the users don't see. So it's in the back end. We have a couple of, I think, key flows. One being KYC, or compliance onboarding automation. We have our own AI agents and processing tools that completely change the way kind of a typical admin would look at KYC or onboarding. That allows our compliance team to process onboardings much faster and provides a lot of value in terms of getting the critical information in front of the compliance officer in order to kind of really be able to onboard at scale. And second of all, I think for us, what's critical is the data structure that we've built the platform on. So every single share that's issued, transferred, redeemed, whatever movement a user is making on the platform is completely traceable, trackable, auditable. We can go as far as putting in ISIN codes for every single share or asset that's held within kind of the platform. It's a decision we took very early on in our journey. Let's use the framework of blockchain technology and how that was built in building our own data structure, which means we are flexible and we can really transform the backend and the way we operate as kind of technology evolves globally. So I think those are two really main points. And I think number three is we were able to strike a balance between flexibility and standardization. You can, like, if you really look at any transaction flow, fundamentally, it kind of looks the same. And if you embed the workflow in a way that is streamlined, you're able to maintain flexibility, give your clients optionality, but still really allow them to feel this really automated, well-governed flow.
A lot of different products in tech to make Zest Equity what it is. Thank you so much. Where can people find you?
They can find us in Hall 3. We're here all week. And actually, I mean, we're looking forward to we have a lot of panels, a lot of other events going on. And launching new products as well. So stay tuned and watch the space.
Sounds good. Come launch it with us back on Taking Stock.
Awesome.
Thank you so much.
Thank you very much.
Back over to you.
Welcome to the Riyadh Exhibition and Convention Center. We're here at the inaugural Money 2020 Middle East. And let me tell you, the only thing higher than the temperatures, the energy here. And speaking of energy, I've got a great interview right now with Lou Zhou, the CEO of Vanker Wealth Management. Thank you so much for being here.
Thank you for having me. It's such an honor.
So, you know, at Money 2020, we always talk about it's the place where money does business. This seems especially relevant given your bullish outlook for this region. Tell us more about what's driving this robust outlook.
Yeah, so first of all, Vanker Wealth Management, we're based in New York. So we come to this region, we flew a long way. And what we have seen so far, it is absolutely invigorating. From the energy of the people to the depth of the economy. I mean, Saudi is such a big country, and from the policy perspective, we see very, very robust policy that supports business growth, supports infrastructure building, and supports foreign investment. So I do think from the bottom of my heart that going forward, you will see a lot of positive growth in this region.
So you talked about you flying all the way here. There's tens of thousands of attendees here. We're also seeing the capital inflows. Tell us more about this investor sentiment, this shift here.
So definitely, wow. I mean, it is amazing to see the hub of finance gathering together in Riyadh at Money 2020. And I think the fact that all the global banks are here shows that we are paying very close attention in this region. For us, we do family wealth management, so to have a diversified portfolio is a fundamental thesis or principle for doing what we do. So that being said, to potentially looking at this region and to look at various sectors. For example, we're staying at a very exciting neighborhood in Riyadh called Diriyah, and it is beautifully built, this authentic Saudi fortress and hotels, but it's in the authentic Saudi architecture, and it's very luxurious, and they represent the first Saudi capital. We just find it is truly, truly fascinating. So the growth is there, and the depth of the economy is there. So these are all very good signs, and we definitely see the factors that the intention of the Saudi government to expand and embrace the economy.
You mentioned sectors. What are the most compelling sectors for you?
In Saudi Arabia, I personally like a lot about the infrastructure, renewable energies, things that align with the Saudi 2030 vision. I think these are all the sectors that we should pay very close attention to.
Thank you for watching Taking Stock. Regular host JD Durkin will be back tomorrow, and we'll let you know what happened in the highly anticipated Fed meeting. We'll see you tomorrow at 3:58 p.m.